Good morning, traders. Welcome to the Flow Show, Monday, 14th of October. Here we go again, ready to do better with markets and hopefully make some pips this week. Hope you're doing well. Hope you have a good week ahead. Morning, Kay. How are you doing, sir?
Hey, good morning, Ryan. Good morning, everybody. Yeah, we are doing already the 14th of October. Time flies.
Yeah, I feel like I've tripped up on a hill and going down it really fast. It's going through the year very, very quickly. Soon be Christmas, but we've got plenty of stuff to get through. Just before we do that, just want to bring your attention to our trader coaching portal site that we've got here, where you can get one-on-one mentorship with my good self and anyone else in the team. All we have to do is have a look through there, pick your mentor, have a look, see what they have to offer, and you can get a coaching course with those, or many coaching courses depending on your needs. Have a look at that. There's a one-time discount, 40% off your first session from that, and then we do offer package discounts thereafter. So have a look at that, check that out. Right, let's get stuck into some of the news. Bit of data to kick us off with. We had some CPI data out from China, again just underscoring the problems they had on there. We were starting to see a bit of CPI growth over there, but it's gone backwards a bit. Flat number on the month, 0.4 year on year. PPI out as well, coming in a very soft minus 2.8%. So this data probably not, definitely not going to reflect the latest easing from China. That's going to take a few months to come through the pipeline and be seen, if it's seen at all. But again, just shows you the scale of what's to come and what needs to be done in China to get things moving over there. Sticking on that, this big meeting thingy that they had this weekend, Minister of Finance, proved to be a bit of a damp squib again, much like the NDRC meeting last week. Finance Minister Phone said that he promised more support for the struggling property sector and only gave loose comments about other stimulus measures. They said they may look at bigger, larger government borrowing in the future. Some figures, 2 trillion, 3 trillion have been bandied around since then. So there was no direct big stimulus measures from this meeting. Certainly nothing in pounds, shillings and pence terms in terms of what's coming, just more promises to do stuff. So there was a little bit of disappointment there. We've also had some other comments this morning from various sub-ministries, if you want to call them those. So we've had the Industrial Ministry, for example, saying that they will roll out supportive measures for equipment upgrades and consumer trade-ins in the fourth quarter. So as I said last week, a lot of this stimulus is focused directly at the domestic market, the domestic economy. They're really not doing all this stimulus just to please international markets, and it's international markets that are getting probably more expectant than anyone else, but they are doing all these measures to get stuff moving on the ground. So that's a sort of thing they're looking at. Improving equipment, getting consumers to trade in old stuff and new stuff, purchase new stuff. They've done the same with their electric vehicle market and other goods and services previously. So this is, again, still ongoing stimulus. This is not all new stuff. On Friday, we get trade data amongst some other big data from China as well. But the SCMP, South China Morning Post, ahead of that Q3 data on Friday, says that exports grew at 2.4% in September. So we'll wait to see how that translates into the quarterly numbers. Gold is liking the cut of China's jib and all the stimulus measures that they're throwing at the economy, because they've raised their 2024 and 2025 China GDP targets. 2024 is at 4.9% now versus 4.7%. 2025 has been hiked to 4.7 from 4.3% prior. So as I said, they like all this stimulus stuff and they see it working out over the months to come. Kay, do you take anything from that China stuff overnight? Bit of a blink and you miss it sort of thing.
I was more worried about the war games that they did over the weekend, to be honest. No, as you say, I mean, it's a lot is driven on the domestic, trying to mend the domestic to then get more outside, I guess. But with what's happening on the geopolitical side of things, the fiscal side seems to be pushed back a little. Yeah, I mean, just as an impact, we've seen stocks yo-yoing quite a bit in China. That's going to be a point of measure to look at how investors are liking or disliking. So whatever Goldman says, I mean, there's been a lot done over the past 6 months, even a year, where some of the big European asset managers also were saying that they still believe in a Chinese revival. But I think geopolitics are pushing back a little on those stimulus plans, unless they change something to their external approach. But you know that's only time will tell, and perhaps post U.S. elections there may be some sort of change of tack over there, depending on how who is elected and what the U.S. will say. But yeah, for now, I think investors are very reluctant to pile into it, into China, to believe and buy their revival story. Once it will get underway or would get underway, we will see much bigger moves there. But for now, yeah, as you say, I mean, it's a lot of it is internal stuff, and then that could be a base for things to get better. But as you see, the SCMP numbers, the exports may have risen a little bit, but I think the overall trade wasn't looking too great.
Yeah, no, I agree with that. They've got a big hole to dig out of. What I would say from this point now is don't rely on the stock market or watching Chinese stocks as an overall gauge. They are still implementing supportive measures. They're doing this swaps thing, this big swaps thing that they're taking applications for, which is again another measure to help, according to them, stabilise markets. But really, it's probably going to be just another stock buy measure. So even though the international market might be disappointed, that's not going to stop them supporting their market. So if you start seeing Chinese stocks rising, it's not likely to be because anything's suddenly got better. It's because they've probably got some of their programs kicking in and they're piling in and buying stocks again. So just keep an eye on that. If you want a more cleaner view of China, look at commodities, and copper's a good one to look at right now. It's doing a lot of movement over all this China stuff as well. So as you can see there, a bit of a blip on the open last night due to that news from the Ministry of Finance not giving us anything big. But yeah, look at things like copper and obviously the currency as well. As Kay mentioned, there have been drills, as they call them, around Taiwan. These drills have pretty much encircled the whole island. I saw a propaganda piece, or the military ministry or whatever they are put out a tweet showing what they were doing around it, and they pretty much they've encircled the whole island with these drills. Again, just to show flex their muscles as they have been. Right, moving on from that, we've got a bit of data this morning. Where are we? Not even on the right page yet. Boom and boom and boom. There we go. Bit of PPI data from Switzerland this morning. If I can find it, where are we going? Is it even there? There we go. PPI data coming in minus 1.3% year on year, down 0.1% month on month. So still some disinflationary pressures coming in there. And as you can see, those export numbers there from the S&P coming in at 2.4, as said, in 0.3. So that's all going to factor into the Q3 data at the end of the week. Over in the UK, Bank of New York has said that custodian clients sold UK government bonds in September at the fastest pace since 2022, and the old trusts event. They sold some £3 billion worth of bonds. Now, there's a lot of news going around as we expected, coming close to the budget. Another headline has apparently business owners looking to sell their businesses before all these higher taxes come in have risen by 6% over last year. So more people looking to exit out of businesses they own for profits before they get nailed with this expected capital gains tax rise. The government bond thing again is a little bit of an indication perhaps that people are, if anything, taking a bit of profit, taking a bit of money out ahead of this budget. So it's slowly building up to something here. The quid isn't really responding to it right now. We're probably still a little bit early on that. We've got PM Starmer waffling at some investment conference as we speak here now. We'll see if anything positive comes from that. But yeah, there's just a few more stories popping up here and there around the budget and what's happening and what investors are doing. So we'll just keep an eye on that as the days roll down to the end of the month and we get that budget. German Economy Ministry, with a bit of a no shit Sherlock in their latest monthly report, said the current economic indicators point to continued weakness in the German economy in the past quarter. Yeah, well, we can all see that for ourselves. I think we don't need to tell us what we already know. Coming across to the US and data from last week. We got PPI data out and pretty much the same, if not a little bit stronger than what we saw from the CPI data. The core number going up, headline PPI dropping, but not dropping as much as was expected. So pretty much in line with what we saw in the CPI data. Not that it added too much to the picture, but just showing that stickiness still there. Jobs not done by the Fed just yet. Over in Canada, we've got a fairly decent jobs report over in that one. A lot of numbers look pretty good. The employment change beating expectations, 46.7 thousand, was expected just under 30. A big jump in the full-time employment, which was good news, but this has been swinging around a bit. So we had a 155k swing last time, or this time. The prior time, we went from plus 60k to minus 43, 44k. So that was a 100k swing to the negative. So it's quite volatile, this data.
Summary terms, maybe. Yeah.
Sorry?
Summary terms, maybe on the part-time thing. And
yeah, it's all
going back away in September.
Yeah, exactly. I mean,
full-time is up pretty good.
Full-time was up really good, but then, as I say, you can see here it's swinging a lot. What you want to see is a decent trend like this when you get months and months and months where the full-time are gaining, not this, as I call it, the revolving door backwards and forwards. So a lot of volatility, but net, overall, it was positive. Positive on the unemployment rate falling to 6.5%, was expected to go up a pip, so a bit of surprise there. A lot of that, though, might be because of this participation rate, which came down 2 points to 64.9%. So that likely took a few people out the jobs market. So that 6.5 may be sort of bit of an artificial number, if you like. Wages as well, that came in a bit softer, 4.5% from 4.9%. So overall, half decent data. Wages, if they don't want them to stay hot, are coming down a bit cooler, but probably can do a little bit more on the jobs market. We'll have a look at some data that we've got coming up from Canada this week, because there's some key data tomorrow. We also got the BOC's Business Outlook survey. That came in at minus 2.3 from minus 2.9 previously. So a little less crappy. One of the key metrics there was the outlook for future sales, which prior was at 1%, came in at 13%. Still pretty low, but a bit of an improvement nonetheless for forward-looking indicators, and that's for Q3. Within the details, I said that businesses continue to experience muted inflationary pressures. Demand is weak. Firms still have excess capacity, and price growth continues to be slow, and those pressures are little changed from last quarter. After the CPI data, the jobs data, we saw the market reducing 50 pip cut odds for the next BOC meeting down to 38% from 53%, but then it jumped after the business outlook survey to 50% from 38%. So the market sitting on the fence in terms of whether we get a 25 or a 50 from the BOC, as is the game we're playing at the moment. We got the flash Michigan numbers as well, which were a little bit on the soft side, and all the details, expectations down, headline sentiment down, current conditions down. Some worse than expected, some, looking pretty ugly than others. On the inflation front, though, we saw 1 year CPI picking up to 2.9%, 5 year coming down as expected to 3%. So again, these just inflation expectation numbers looking a bit sticky. As we know, central banks put a lot of their money into what consumers are thinking about on inflation. It forms part of their readings, particularly the ECB. So those numbers there will be of interest to the Fed. Fed's Logan says that recent inflation data is very welcome, and it's important to gradually adjust policy towards neutral. We kicked off earnings week, or earnings Friday, shall we say, earnings season on Friday, with a few of the banks and the financials coming in pretty good. No real shocks to any of those. So the likes of JP Morgan, Wells Fargo, which was some of the numbers in Wells Fargo were a little bit off, but still decent numbers overall. So no problems at the early stage of earnings season for that. What we did get from the Wall Street Journal, apparently a report that retailers and restaurants are cutting prices and offering more special discounts. Apparently demand for goods that are not necessities are seeing some weakness, things like home furnishings and expensive trainers, apparently. Nike, for example, has apparently been dropping prices due to unload inventory that isn't selling as well as they had hoped. So that's an important comment there, because I often talk about inventories. If firms aren't selling stocks, they're not going to order larger stocks and keep larger inventories. They're going to draw it down, which is a negative for growth. Nike looks to be in that position. They've got a load of stuff that isn't selling, so they're going to start discounting it. They said that the outlook for the balance of the year is going to require us to be more promotional. So this is when you get perhaps a bit of a pickup in the disinflationary pressures, when prices actually start being cut rather than not going up or going up slower. So just something to keep an eye on. We're also obviously heading into that busy US holiday period, shopping period. We start getting all the Thanksgiving stuff and all the big Black Friday sales and all that palaver happening, and then Christmas. So it's going to be interesting to see what happens to inflation over those periods, and whether retailers and restaurateurs are going to have to chase a bit of business by cutting prices further. We might get a little bit of a pickup in, as I say, disinflationary pressures going into the end of the year. Kay, did you see anything from any of that data, CAD data, or the earnings tickled your fancy?
No, I must say on that report of Canada, I was just a little surprised walking back in that actually Canadian dollar is weaker, is continuing to weakening. No, for the rest, yeah, the Michigan is a bit the communicating vases. Yeah, when inflation expectation rises a tick, the consumer is not very happy. We've seen that many times. So that's about how I read those reports. No, for the rest, on those data, I think they keep market expectations for the Fed, we have to keep them relatively conservative, I would say. Globally, those data that we've got last week, that's about it for the dollar. So I'm still looking at the dollar from a right now relatively positive side. The thing is, though, that the upcoming, well, I mean, if not if you're a day trader, but if you trade things in general, we will have to start to pay attention to a few things like regarding the dollar. The elections are now coming into view. We're less than a month away. We do have of course, for the dollar, we do have some more reports, unemployment coming up before that. But not really wanting to get too cautious. I'm still relatively positive for the dollar right now in the short term based on the data. But longer term, into after the elections, we may start to be a bit cautious. And I think similar for sterling when you listen to Starmer, but then when you read that when we read that the national insurance contributions for businesses will go up. That's to the other side of the spectrum, I would say. So yeah, it's all a bit up in the air for the sterling. I think going into the budget, we do have quite interesting data coming out. Yeah, for the sterling this week again. I think we have the unemployment data tomorrow, and what do we have on Wednesday? We have something on Wednesday.
We've got everything: CPI,
CPI,
jobs, retail sales.
Yeah, it's going to be an interesting week for the sterling this as well. So that for the data side. Yeah, for the rest, looking at it globally, I read a couple of things which we could talk about once you are done on all the news.
Yeah, sure thing. I was just going to go over the calendar quickly.
Sure.
Just to note what's coming up. Nothing really of note today. It's a half holiday in the US. Stocks are open, but bonds are shut. Columbus Day over there. Tomorrow we get the UK jobs report, and we get some final CPI numbers from around Eurozone, Germany, ZOO. So we'll see how crappy that is. Canada CPI tomorrow. So that will be fairly important, obviously, for Bank of Canada thinking. The market's really still, again, it's the market seems to have caught this bug about 50 basis points. The Canada's cut 3 times now. Do they really need to step up to a 50? I don't know. We'll see. Maybe that CPI data will swing it if we start getting one handles on more of the numbers now, other than the BOC core. But remains to be seen. Kiwi CPI as well. That's a quarterly number expected to come down to 2.3% from 3.3, I think it was, or 3.2. So again, the market will be looking to see if the RBNZ want to go another 50 if that's soft. And then we get the Empire State Manufacturing kicking off as well. Sorry, Kay, did you want to speak about that CAD data or something?
No, not really. I didn't say anything specific, but yes, you're right. And we've got the Bank of Canada coming up on the 23rd of this month, if I'm not mistaken. Let me quickly check. Yeah, and it's also a meeting where they revise their opinions and stuff. So could get an interesting one. Yeah, the CPI could drag it. I must say honestly, Ryan, I'm on your side. I wouldn't think or find it necessary to step up to 50 bps. Perhaps the market is running a little ahead of itself, but has to be really noted that the Canadian dollar is on a quite weak footing right now, and the market doesn't seem to give up on it that easily, even after that stronger jobs report. No, and then yeah, as we said, big data week for the sterling. Huh?
Yeah, exactly. Get CPI on the Wednesday, as you can see there, and PPI data as well, and all the RPIs and all the bits in between. A bit more Canadian data, housing, manufacturing, sales. Thursday's a pretty big day. We get Aussie jobs coming in the morning there. Then we get the final Eurozone CPI numbers, which shouldn't be too volatile. It's not often volatile because obviously it's ECB day on Thursday. But already I'm not looking forward to that one because as it's a pretty done deal and well communicated that they're likely to cut, they've probably sucked a lot of the volatility out of that one. Following that, we get some data from the US retail sales. Now, I looked into this quickly. I don't think this is potentially going to be affected by the first hurricane because that came at the end of September and the survey period is usually the middle of the month. But the market has or is going to be looking at things through the lens of what's been going on in the weather as well. So it may not be in this number, but at least we'll get an idea of what the consumer's been up to. It is the start of the manufacturing data. As I said, Empire on Tuesday, Philly Fed on Thursday, plus some industrial production numbers and some inventory data as well. Then we get some house price data and whatnot kicking off too. Friday, CPI in Japan, always keeping an eye on that one to see what that means for the Bank of Japan. And then as I said, we've got a ton of Chinese data coming through as well. Again, none of this data will be showing any impact from the fiscal measures done over there. And it's going to take a while probably before we do see that filtering through. So if anyone's looking at these numbers as an indication of the kitchen sinks they threw last week and the week before, won't show up here. Retail sales in the UK, that will finish things off for that run of data, and then starts and permits in the US. I looked at this one as well, and this one may capture that big rate cut from the Fed, because obviously that came more to the middle of the month. So we might see something here. That's what I'll be looking for anyway. How that rate cut is going to be seen in some of the data that we get. So we'll see if it does or doesn't. If it doesn't come in this one, I'll be looking for next month. Anything else there, Kay, that you've seen of interest?
Not in the data, but I was up, but a couple of things caught my eye when I was off, and then there was this. People were wondering about, it's more like medium term, longer term stuff, but wondering about the Nikkei, the investments and things. And it seems that Buffett is still very eager to continue to invest in Japan. But if people wonder, and we as traders, we always wonder, how do they invest in a country? Because there's a couple of possibilities. One of it is you just buy the currency and then you invest in the country. But Buffett does it on in a different way, right? They are selling bonds and they are issuing bonds in Japanese yen, so they actually borrow the money to invest. And you can always look at things both ways. If you're really interested in buying a country because it's strong, like for instance, I would say if you believe in US companies, you buy the dollar, but you can also do it by issuing bonds, and that's the thing that Buffett is choosing to do. So it does not really have the impact on the currency that one may expect when such big investors are diving into a country. So that's one thing that is interesting, because it's kind of a confirmation that they are not outright buying Japanese yen, but they still want to invest in Japan. So they still have confidence in the companies giving returns. And the other one, and I think that may be of interest to you as well, Ryan. It's not a new factor, but I've read this as well when I was off, that Costco in the US, they saw their bullion, their gold that they are offering now in their shops in the US. They saw their whatever they were buying for the month of October got all sold out in the first week. So it does show us that people, although the retail market is by far not the biggest market. It's actually in the global scheme of things. If you compare it to central banks and everything, is a relatively small market, but it does show. Since we see the same thing in the Middle East or in Asian countries, it just still shows that the private market still has an interest in buying precious metals. And I think it is interesting because we usually say that when your taxi driver or your waiter or waitress at your restaurant is talking to you about buying something, we're usually at the top. But it does show, as this has been going on for a while, that there's still some worries in the private market, people about still lingering inflation, about the geopolitics, probably about uncertainty about economic developments, and perhaps even now the upcoming elections over there. But I think it's relatively interesting that the private market continues to have an interest in buying physical gold.
Yeah, very much so. And yeah, I mean, Costco's, they've made it pretty easy to do so. I think that's one of the appeals of this one.
Very low spreads, actually. If you look at it compared
and
to
decent
other
prices and
venues.
stuff. Yeah, and you know, why not go in and buy 5 kilos of chicken breasts and pick up some gold bars while you're there as well. I'm
Exactly.
due a Costco's run myself, so I might see if they sell any gold while I'm there. Maybe I can pick it up alongside a pack of pens and some paper. Anyway, that's something to keep an eye on from that side of things. And you can see we have a dedicated news and research room where we drop in a lot of stories and things that are important for the market, so you can keep up to speed. A good resource if you're just checking in from via the different sessions. Like if you're coming in from the US, you can have a good catch up on all the news headlines that has happened through the European session overnight and whatnot. So that's another good resource that we have on our platform in our chat room there. Right, that's nailed it from the rest of the data. So let's have a quick butchers what's going on in markets and what's coming up. Bit of a quiet start to things this morning. Not any massive movements going on around. Dollar yen actually looking pretty calm for once. Oh, we had a 45 pip range today. That's very, very calm. Vols are down a bit on there. We're sub 12% just by a pip in the 1 month vols. Cables up a bit though. I'm just seeing 8.17%. So a bit high there. Maybe again just reflecting or starting to reflect a bit of budget volatility to come. So I was looking at dollar yen. Let's move it onto there. There we go. We are sitting around these highs though, so it's not pulling back too far at the moment. So it could be on the move back higher. I see your long, Ali, and don't know where you're long. Can't remember where you're long, but you're looking for 150.20. Yeah, I think it's possible. I think if we break through these highs, 150 is obviously the next big target there. Still a dip buyer's market for the foreseeable future. So you're going the right way on that one. Overall, I don't have a great feel. I'm still keeping an eye on yields for this one. And if yields start to become a bit toppy, then outside of data moves, just might see a bit of, from the dollar side anyway, just might see a bit more of this bit tougher to go up type scenario going on here. But as bond markets are shut today, we're not going to be able to watch yield, so it's going to have to move all on its own.
I'm a little long with you, Ali. You're in good company.
Yeah, that's good. Always good to have good company rather than bad company. Looking at the euro, had that pretty decent hold down at the 109 figure and bounced since then. Moving my lines around. There we go. But we're still pretty limited in terms of bounces. The ultimate line being up here at this 50-60 area, which has been a bit of a support point on the way down. It's a bit of a former support and resistance area. We're not cracking through that. So really your ballpark's 109, 109.60. Needs to get above there to start breaking this downtrend. Otherwise, this downtrend does look like it's still firmly entrenched. And while it is, and if we're going to stay below 3040s, we're probably going to have another look at the figure. And if you go there pretty quickly, maybe we're heading a bit lower on that one, but it's slow going at the moment. Dollar CAD, a bit of a regret on this one. I was thinking about trying to pick it up down here after the moves on Friday. I thought it might be worth a dip buy for a bounce. I didn't get the initial one. I was looking for another one. I didn't do it. I didn't want to chase it. And here we are coming up to 138. So this move that we've seen, still looking pretty strong. And I said if we get and hold above this 136.50, it really is a bit of a gateway to these high levels. We're going to start getting into some decent areas. If we get into the 138s, 138s, high 138s, 138.60s, we've been up there a few times and messed around with some extensions to 139. Like UK, I'm a bit surprised at this. I'm not surprised that CAD isn't following the data or anything else really. It's on and off your bus as it wants to be. We did see a bit of oil weakness this morning coming in. Maybe a bit of relief from the weekend that nothing happened. It's not a massive pullback, but it's still good couple of bucks off. So that might be adding to some of this CAD weakness. But as I say, it's a bit of a fickle correlation these days. What do you think about this one? Are we going to? Do you see any way that we might break out the top, or is this just another bit of a mooch around the range?
Well, the thing is, breaking the top, you would need to break. 138 is one level, but then you really need to go and test 140. But it does seem that the market has a pretty firm grip on the Canadian dollar to send it lower. We are actually trading around 138 right now, 137.90, 98. It's a bit of a strange one. And you know what? We can compare it to what's happening sort of in the Norwegian kroner. That both currencies that would be linked to a bit of oil and stuff moves have strengthened a bit when oils were rallying, but then straight away get slammed when oils are coming back. So it shows that both are still viewed in the market as things that where strength is not holding. And we see it also on that dollar Norway, right? We're pretty. You see those setbacks, and then you're pretty rapidly coming back to those levels a bit higher up, and Canadian dollar is undergoing the same kind of pressure. And I thought that Canadian dollar was not really priced extremely right in those 134s, but then the continuation of this weakness without really getting any decent retracement, because now we've been going up like basically 3.5 big figures or so without really stopping it. If you look at even the 15 minutes, you where you are on there right now, it's a very steady move. So market really buys the average performance of the Canadian economy globally, and the softness in specifically McLem's words.
Yeah, and there's probably a bit of China behind this as well, because you got to keep an eye on the commodity FX. Like you say, the NOK, the Aussie, they've all taken a bit of. They're all moving on this China stuff as well. So there's lots of secondary inputs, if you like, from these sort of things. So yeah, I mean, just a quick look.
I think it's still not obvious, but barring perhaps if you stick to the Aussie and you look at copper, it does move gradually together. But if we look at traditional correlations, they're still very on and off, because for instance, if we had seen that in stuff like the yen, for instance, yen is still importing a lot of stuff, right? So usually when commodities come down, or oils are coming down, or energy is coming down, it's positive yen. But the yen is not at all on that bus, as where Aussie dollar, Canadian dollar, Norwegian kroner are, but also on and off. So it's still not obvious to trade correlations for more than a few sessions, and then we need to look perhaps at what's happening on the side, or bigger pictures. And I've got the impression that perhaps like the real big investors, they concentrate on one thing that could be the Canadian dollar for now, and then the rest is just living its own life, you know.
Yeah, very much so. And it's not Coast Guards, Ali, it's Costco, the big shopping brand from the US. That's all like a bit of a wholesaler, but open to the public. Anyway, yeah, Aussie had a little gap down, well, smallest of gaps, if you like, for all you gap watchers. Has it quite closed it? I don't know. It doesn't look like it. But again, this is the China effect appearing on that. And we're still knocking around these low levels as well. I've been warning about that last week. You know, we had that spike up to 60s, which is just below this old 70s line, which has been a bit on off. The bounces are looking weak. We're doing a bit more than going sideways compared, as I said, to something like euro dollar, which has continued. You know, this phase is still going down in the euro dollar, but Aussie, we're going sideways, but we're not bouncing too far, and we keep coming back down here. So we know there's big support down here. We've got moving averages, fibs, and prior levels and whatnot. So it is a big area, but if we're not getting too far away from it each time, then the pressure remains on that we see a bit of a break, and then maybe we start heading a bit lower. Like I say, here's some of the moving averages in play. Maybe we go to undoing a bit more of this trend that we've seen. Similar Kiwi, looking a bit worse, obviously, after the RBNZ. I'm still short a bit of Aussie Kiwi. It's not doing an awful lot. Didn't quite get my next entry up here, but it's not coming down too fast. It's just waffling about this level. So there's still a chance that we do see it moving back higher. And if we do, I'll probably start adding a bit more to my position. But for now, it's not doing too much at all. Gold, I just wanted to look at quickly. I know K-Man's probably going to have a look at it as well, but just from my eyes, we've had a half-hearted attempt at the top of the range. Didn't quite get up to the 70s, but we've gone from down here up to there. So this is where we're probably going to start running into a bit of traffic. If we break there, then we could be off, but it's not that clean a line. We've got this prior high as well and all these little bits and pieces. So really clearing this level, 26, 70, 71, 72 is just a first step. It will need to take out this high. Even if it takes it out by a couple of bucks or half a buck or whatever, it just keeps the momentum going. But if we comes above here and, you know, falls short, you know, maybe around 80, 79, 80, can't quite tap that level, then probably we're going to see another pullback back into the range and then see what we do from there. But yeah, I've got along a bit of this on Friday. It's going all right. I'm slicing and dicing. We'll see where it goes. Kay, do you want to take it for a few?
Yeah, yeah, okay, yeah, no problem. Let's get to the other metal perhaps first, and then have a look at what's happening here and there on a couple of currencies. I'll grab the yen maybe quickly as well while I'm on it. Yeah, so we had this test into the support zone on silver, and it held. So that's positive, especially for Mr. Stelios, who bought it around here, I think, last week, which is pretty decent. Yeah, it's holding up pretty well. A bit like defying the laws of gravity, I think. If you look at the rest of the commodity sphere, gold is much clearer, still a geopolitical play, right? But it does seem that silver is now just moving together with gold. When gold recovers, silver does recover on its own as well. It looks as if this zone now is already good enough. Yeah, low 30s, high 29s. Keep an eye on if we would ever get a retest on perhaps weaker economic expectations. See if it holds there, and then can start to jump again to break those prior highs, and then we need to go on longer term frame to see where we can get. But I think like somewhere around 34.5, 35. I've got some interest there too. Gold, as Ryan said, a good bounce of this level here in the low 26s. Yep, and then started to rally back through a bit of a trend line. We need to get above this 26 68 70 where we stopped last time, and then we can start to move gradually back up again. But I do think that if one wants to ignore the better bit dollar elsewhere, the gold is still somewhere of a safe asset where you can stay when for as long as the geopolitical situation, especially in the Middle East, remains that hot. And I think it's one of those instruments where you don't look too much into intermediate data for one particular currency. This is just trading the instrument. If you don't feel well against the dollar, you can always leg it out or spread it out versus other currencies like, I don't know, euro, where ECB may cut, or something like sexier, like perhaps being long gold, short yen or so. But yeah, it's still very well bid. We thought last week and the week before, last week especially, that there was a potential to go and visit the prior high, but we didn't even get under 26. So that still shows us it's still very, very big. I think we'll have to stick to that view now for as long as we hold at least 26, 25, 25.90, 25.80s, right? This is still very, very, very big. And I think, Ryan, you're in not too bad a situation, therefore, at least getting a retest of those highs at some stage. That it just looks like it. Yen. Okay, this one was one that I've been monitoring. I'm a tad long again. I do think that it is possible that we get a move, at least somewhere in the 150s. I mean, this is an interesting little level here, the 50% of the whole move lower from 162 up to down to those levels just under 140. The 50% comes in at around 150.80. There's a bit of a trend line also ongoing there from prior lows, which had been broken, kind of retested, and then come back down. That comes in the low 151s. But then this one could be an interesting one in the making. And again, if you look at it, prior top, low, low, and then we've broken through, obviously, on the interventions and data in US turning around a bit, if we recall. And again, it points at a potential return up to 152, which could then lead us to form a much longer term, medium term head and shoulders. That will depend on when we get there, whether it is into the elections in Japan, into the next Bank of Japan meeting, which is on the 31st, right after those elections, or into the US elections or the next FOMC. There's in time-wise, there's some decent dates coming up that we need to monitor. But if nothing really spectacular happens against the dollar, with the US yields, okay, the twos are hanging around there, but the tens are moving, have moved up again, well above 4% right now, and the Japanese are stuck somewhere just below 1%, as you can see, top end of my screen there. It is all possible, some kind of carry trade, some kind of people, as I said, it's still costing money to be long yen in dollar yen or some other currencies versus yen. It's still costing money. If you're long yen and you're short dollar yen, you will have to be right relatively soon. Okay. So I think there is a bit of a case for this to get back up to somewhere in the 150s. Now, this is the technical picture. The other one, the other side that we need to pay attention to is the officials in Japan, right? Because they already last week started to show up. I don't know how or whether they were on the wires last Thursday, Friday when I was off, but they tend to show up a little faster than they did in the past. So they may already feel uncomfortable if we start to move above 150. So don't rule out them coming online and starting to jawbone it. Okay. Last one, just a quick one. I want to show today is dollar Swiss. Look at this 61.8 of this last move lower. 86.05, 06, call it 05.10. Tried it, shied away. Tried again when the dollar saw those better numbers and failed and came back down. And we are here once more. I do think based on the past numbers from the S&P and the way that they were talking, Schlegel and company, that they may have been involved in those bigger moves lower. I don't think they did anywhere big amounts or so, but it does seem to point that the S&P may have been involved in the Swiss franc when it gets a bit stronger. So if my hunch is correct that the dollar is still going to do relatively well until the next bigger set of data, I think we may be on the third attempt here, maybe bingo, and we start to move higher again. I do not think it's going to be explosive, but I got the impression there is a fair chance that we get through this level at some stage and push on a little bit. That is all for me for today, Ryan. Back over to you, mate.
Yeah, thank you very much, mate. Wonderful stuff as always. I think we'll call that a day. We've got you set up for the week ahead. So once again, wish you all great trading ahead. Have a good one. And yeah, we'll catch up with you tomorrow. Thanks all.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.